It's been about 3 years now since I made my original Bybit for Beginners Ultimate Guide video, and I'm pleased to say that we have now this updated video. Bybit has come leaps and bounds, and if you're someone that wants to make it as a crypto trader, start making money in cryptocurrency, Bybit is the solution. Honestly guys, I've used so many different exchanges as someone that's been in crypto for over 5 years, been around the block, and Bybit is by far my preferred crypto trading platform. I even have the t-shirt, quite literally, as I can show you here. You can see as well on CoinMarketCap, it's one of the top derivatives exchanges, coming in just after Binance and OKX. And you can see maker fees are very reasonable, which we'll be talking about in this video. But ultimately, Bybit has all the features, all the tools that you need to trade cryptocurrency, to invest in cryptocurrency. And guys, this is going to be a complete guide how you can start making money as a crypto trader. There are chapters down below, so feel free to navigate throughout the video. You can rewatch, skip ahead. And yeah, let's just get straight into it. Just, of course, everyone has obliterated the like button. Like button smashed. Let's get started. So first up, guys, this is not a sponsored video. I'm just a huge fan of Bybit who uses them to trade on. I am an affiliate partner of theirs. So if you want to support the channel, if you want a Bybit account, check out the link down below. Using that link, not only will you earn a bonus, I get a bonus too, and you'll get 0% fees for a whole month when you use this link. It will direct you to this page here, and you'll be able to see the promo code 14974. That means you're going to get the exclusive bonuses only available on our channel. So when you use that link, sign up, deposit, make a trade, you'll be able to claim those great bonuses. So once you've signed up for Bybit, one of the things it's going to ask you to do is sign up with KYC. KYC is Know Your Customer. It's something that Bybit brought in this summer, and it's something compulsory. Now, if you're anywhere pretty much outside of the US and Canada, KYC is not an issue. You can easily pass it with an ID, and KYC level 1 is perfectly fine for depositing, withdrawing, trading. However, if you're in the US, and US of course have regulations against trading cryptocurrencies, there is a solution that many traders are using these days, which is a Palau legal ID. Palau is an island in the South Pacific, and you can get a legal ID, link in the video description below, where you can actually pass KYC, not only on Bybit, but on all different types of crypto trading platforms and many other things where you may need it, even for the likes of Costco, Airbnb, just for verifying identity. This is a completely legal ID, and it works as an NFT. So you can have a digital card and they will ship a physical card to you. So if you do want to trade on Bybit and you're in the States or Canada, yes, this is a great solution. However, if you're not somebody that wants to do that for whatever reason, there is a fee involved. I think it's about $200. There are other solutions like 𝗕MEX, for example, where there's no KYC involved. You can buy through a platform that supports the US and Canada like Kraken, and you can trade futures on 𝗕MEX. But if you want to use Bybit and you're in the States or Canada, yeah, you will need to KYC. So that is one option. So once you're signed up for Bybit, you've completed the KYC registration process, you can then, of course, deposit or buy some cryptocurrency. Of course, you're going to need crypto, whether you're doing spot, whether you're using the copy trading platforms, or whether you're just simply trading futures derivatives, you're going to need some crypto. So the first option you have is by simply buying crypto. There's one-click buy, or there's fiat deposit. So the one-click buy option here will allow you to select one of the payment methods. So you can do a fiat deposit, or you can use a bank card. So you can use any bank card, whether it be MasterCard, Visa, but I believe it can't be a credit card, so that it needs to be a debit card. Then if you want, as another alternative, there is fiat deposit, and you can use one of their payment providers to deposit fiat currencies onto the Bybit exchange, onto your account. And then of course, once you have that fiat, you can easily convert it and trade it into any cryptocurrency you want simply through the convert function, which you'll find by going to trade, convert. There's no slippage, zero fees, and you can easily just transfer your dollars, pounds, euros, what have you, into cryptocurrency. Now, of course, the other way you can deposit crypto into your Bybit account is if you have cryptocurrency already, you can send it from any other wallet or exchange cryptocurrency trading account you may have somewhere else. And the way that you do that is simply by pressing deposit up here. And you can select the cryptocurrency that you have that you're depositing, obviously making sure it's the correct one. You have to be particularly careful, for example, if you're depositing USDT, because there are a few different chain types that it could be. Probably the most common is the 𝗙𝗏𝗃 chain, which is going to be 0x it begins with. Another common one, which is preferable in fact if you can, is 𝗕𝗏𝗃 because there's very low fees involved with it. Even still, 𝗕𝗏𝗃 is low fees now as well. But do make sure you are selecting the correct coin and the correct exchange to avoid losing your cryptocurrency. Of course, you can just scan your QR code, or you can copy and paste the wallet address and you can send cryptocurrency straight into your Bybit account really easily. So the next thing I want to show you before we get into the actual trading element of this video and how you can start making money using the features to buy, sell, trade, use leverage and what have you, I want to just quickly mention about the unified trading account that Bybit offer versus the non-unified trading account. It's going to basically, when you sign up for Bybit, the default at the moment is to be on a standard account, a non-unified trading account, but it will prompt you to upgrade to a UTA, Unified Trading Account. I personally prefer the Unified Trading Account. I'll show you what it looks like. So this account here, if you go to Assets, I actually have Unified Trading. Unified Trading encompasses your spot and your derivatives trading all as one unified trading account. I'll show you what I mean. This account here, this is a non-unified trading account. This is one, this is another account of mine. I can put it over here and you can see the difference. So this one here, non-unified trading, you can see it has derivatives and spot, also USDC derivatives. If you have a unified trading account, it basically incorporates all into one. I find it much easier to manage. You also can easily trade when you have a unified trading account. You don't have to constantly switch funds around. So my preference is unified trading account, but if you want to keep things very separate and individual, that's also perfectly fine. I thought I would just explain what that is. And then if you do want to upgrade to unified trading account, if you can't find where to do that, in your account, you could simply go to USDT Perpetual and it will give you the option on the right hand side here, upgrade, and that can start the process to upgrade for a UTA. Right, so on to the fun part. We're going to talk about trading, how to make money as a crypto trader on Bybit. So one of the first things I want to demonstrate and show you is the trade menu. So under the trade menu, you've got spot trading, which is buying on the spot. If you've been at Binance or a Coinbase or a Kraken user, you're going to be familiar because this is typically the easy way of just simply buying cryptocurrency. Bybit is fantastic because it literally offers any cryptocurrency you can ever think of. You can use the search coin to find it. And yeah, very, very easy, very, very low fees. You also have the convert function. So let's say you sent over some Ethereum or you hold some Ethereum in your account, but you want XRP, well, you can easily do that with limited slippage and no fees. So let's check out spot trading. Spot trading, we'll go straight in here. You've got the options of USDT. So you're trading Bitcoin against USDT or USDC. But for this one, we'll go straight into the Bitcoin USDT pair. So when you do so, it's going to give you the option of trading with margin. So it gives you a 10x margin. This is still spot. This is not futures or derivatives trading, but it is having a built-in margin product. So essentially, if you had $100, it actually allows you to buy $1,000 worth of Bitcoin using the margin feature. The difference, just to explain, between derivatives and margin, using margin, you can't be liquidated and you're not actually borrowing the cryptocurrency. You're actually trading the underlying asset. It's still a spot trade. It's just a spot margin trade. So you can choose between spot with no leverage or margin, 10x leverage, or you can change that leverage anything up to 10x leverage. But 10x is I should be saying margin. 10x is the most margin you can use here. So to find the different coins, you can simply use the search bar, check out the favorites. Some of the USDC pairs actually have 0 fees, so that may be preferable for some if you find the cryptocurrency you want. But in this case, I'll show you an example. Under spot here, we've got the Bitcoin pair. Let's say we just want to do spot, and you can see I've got a USDT balance. Because I'm using a unified trading account, it doesn't matter as long as it's in my UTA account. And you've got different order types. You've got a limit order type and a market order type. Now, market order is great for getting into the market quickly. You don't have to wait for your order to be filled. Limit order is where you set a price and you wait for the market to come to that price. There are lower fees with limit order and you have more control in terms of where you get in, but market order is good for if you need to get into a trade really, really quickly. You're going to pay a higher fee, but you're also getting into the market straight away. So to perform a limit order, I'll give you an example here. You can see the price of Bitcoin is currently $29,897. Well, I could set a limit order for $29,000. So that's basically saying I only want to buy if the price comes down to $29,000. I could set it, for example, 25% of my balance. I could press buy Bitcoin here, and it's not going to just set a live order. It's under current orders. It's not in my positions because it's an order. So this order, you can see, if I move my screen slightly, let me move my face out the way so you can see what I'm talking about. But you'll see that I've got my order set, and yeah, basically it will only trigger that order if the Bitcoin price comes down to 29,000. That's versus if I did a market order, it's going to get in at the market price. You could literally simply just press buy or sell. You can do either. But in this case, I'll show you a buy example. When you press buy, I'll enter the value again. Let's just do 25%. Buy, it's going to get straight in and you'll be able to see that order. And as I've bought it on spot, you'd basically go into assets and you would go into unified trading. And I can show you here, this is the Bitcoin that I've just bought on spot. So it's there, $530 worth of Bitcoin. If I wanted to sell it from assets here, I could press trade, or I could simply find it by going back into spot trading here. And I can see that if I went to sell, I could sell all the Bitcoin I have, which is $530 worth, and I can sell it straight back, and it's as easy as that. And I'm also going to cancel this limit order because I don't want that to trigger. It was just for demonstration purposes. So to be clear, spot is for those buying and holding or doing some kind of very long-term, low-risk trading, basically position trading, holding for weeks or months at a time, that want to use no or very little margin. So it's a great option. And of course, you can sell cryptocurrency on their spot feature as well. But let's move on to where the real earning potential is. But warning, risks occur in this as well. We're going to move on to derivatives trading. Derivatives trading is great because you can utilize leverage. But with leverage, where you're borrowing cryptocurrency to make more, there's also bigger risks as well. More reward, more risks, and we'll be covering all of that. So in order to find the derivatives trading feature on Bybit, you can simply go to the menu up here, derivatives, and you'll see the different options. Derivatives portal's just a highlight explaining what all the different features are. But first up, you've got USDT Perpetual. So this is trading cryptocurrency against USDT. And you also have the option of USDC contracts. So basically the same thing, but instead of USDT, it's USDC. So depending on the trader you are and what you prefer, you may have a preference. The other main difference option here is inverse contracts. Now the difference between inverse and perpetual is inverse is trading cryptocurrency and it's margined with its own coin. So for example, if you trade the Bitcoin USD contract, your profits and losses will also be in Bitcoin. So if the Bitcoin price is going up and you buy or long Bitcoin, your profits will also be increasing because your profits are in cryptocurrency. So inverse contracts are actually very good to use, particularly in bull markets when prices are generally going up more. So if the price of Bitcoin's going up and you've put a long trade, ideally you want your profits to be in the rising asset price rather than something stable like USDT, which wouldn't have actually moved. But in more choppy conditions and bear market conditions, many people prefer using USDT because if they're shorting or they're doing short-term trading, it's ideally more suitable using USDT or USDC. So whichever one you use, how you use them is generally the same. So for demonstration purposes, I'll be showing you on USDT Perpetual. So from the menu here, you can select any cryptocurrency you like. And as you'll see, there are literally probably hundreds on Bybit to choose between. But we'll go with the simple one, which of course is Bitcoin. So we'll go Bitcoin USDT Perpetual. So things to know when trading derivatives. So you've got trade and you've got tools. You won't need the tools section for standard derivatives trading. This is when using trading bots and copy trading. I'm going to talk more about that later in the video. So you want to make sure you're in trade. Now you've got two types of leverage you can use. You can use either cross margin or isolated margin. Now, if you've upgraded to a unified trading account, you're only going to see cross. That's one of the features of using a unified trading account, that everything is calculated with all of your cryptocurrency, and it makes things a whole lot easier in my opinion. But if you don't have a unified trading account, I recommend to use isolated margin. That will make sure that your individual trades are treated independently and it's less riskier, let's put it that way. But if you have a unified trading account, cross is obviously the best and only practice to use. So you'll then be able to select the leverage that you want to use. You can choose leverage for Bitcoin between 1 and 100x leverage. I highly do not recommend to use 100x leverage. Very rarely will you need such high leverage. Different trading pairs offer different leverage. So for example, with something more volatile like 𝗕𝗏𝗄 coin, for example, it's not going to allow you 100x leverage. It allows you up to 50x leverage. So depending on the risk of the trading pair, it's going to give you different options. It's generally either maximum of 25, 50, or 100 for the more tradable crypto pairs. So you can select your leverage here. Let's say in this argument's sake, hypothetically speaking, for demonstration purposes, we'll use 10x leverage here. And like where I showed you on spot, if you watch that part of the video, you've got the options of limit market. But on derivatives trading, you've also got the option of conditional trading. So I'll talk through each one of those. So a limit order gives you the option to set a price that you want a trade to be entered at. So you can see, for example, the current price of Bitcoin is $29,900. Well, let's say we only wanted to buy if the price came down to 26,000, just as an example. So under limit here, you would basically put in $26,000. You would set the order quantity, so that's how much you want to use. Now, as things stand, you can see I have an available balance of $2,951, so basically $3,000. Let's say I wanted to use 50% of that, which is going to be approximately $1,500, or in this case $1,280. But because I'm using I'm using 10x, I'm using 10x leverage, the order size is actually going to be 10 times the cost. So it's actually going to be a value, as you can see there, of $12,662. So I'm using $1,280 of my own money, but I'm controlling a $12,500 position. And that's because I'm using 10x leverage margin. If I was to use 100x leverage, well, the value of that trade is going to be $120,000. Just to show you an example here, if I did set that, and again, do not recommend this, it's going to allow me nearly $120,000 of value. So even if the trade goes up 1%, I make 100% profit for every 1%. But the reason you don't necessarily want to use high leverage is because your liquidation price is going to be affected. And I'm going to move on to liquidation and how to work out liquidation in a moment. So I'm going to set it back to 10x leverage. We don't want to be liquidated in a flash because that's what can happen if you use high leverage. And 10x is still considerable. And you can see here, my order value, 𝗕𝗬𝗕𝗓 You're going to want to select post only if you're doing a limit order. And then you can press buy long or sell short, depending on what you want to do. So in this example, I want to buy if the price goes to 26,000. It's going to be situated now in my current orders, and it will only be filled if the price of Bitcoin comes down to $26,000. But that's just a demonstration, so I'm going to cancel that order. And if I wanted to get into the market right now, let's say same premise, 10x, it's a market order, and the value here is giving me about $15,000. I'm only using $1,474 of my own money. And if I wanted to get into that trade right now, I could simply just press buy long and it will enter at the market price. I'll show you, buy long, and it goes straight into position. So now I'm actually in a real live trade. You can see I have a liquidation price of $23,984. What that means is if the price comes beneath that level, I will be liquidated and I will lose this entire value. And as you'll remember, as you'll recall, it's $1,470. So of course you want to protect your liquidation with a stop loss. And again, I'll be moving on to the stop loss liquidation in a moment. Let's finish the order types. So I'm going to close this particular order at a loss, unfortunately, $10 in a loss. The reason why it's moved quite quickly is because I'm leveraged. But you can close it in two different ways. You can close it with a limit order or a market order. If you want to close this order really quickly, use market. If you wanted to set a limit to where the order closes, you can do as well. For example, you can see that I entered at 29,861. Let's say I only want to close it if the price comes back down to break even. So I could set that at 29,861 or even lower, basically, to ensure I make even a small profit, even with the fees included. So I could take that down to maybe 29,800 even, and I could close it in that way and press post only. And by doing that, it's basically going to mean that you have an order come up, but it's basically now put it here in closed P&L. But the positions, I'm just going to close it now with a market order because we don't want that open. So that's limit, that's market. Conditional allows you to put multiple orders in your account. So whether the price goes up or down, you could basically be preparing for all eventualities. And to give you an example of why you may want to do this, you might see a technical pattern, for example, like this kind of rectangle pattern here. You can see the support is at 29,826. Resistance is up here, 31,500. Well, you might only want to sell if the price breaks this level, and you may only want to buy if the price breaks above this level. And by the way, guys, I have many different videos on how to do technical analysis, how to trade. You can check out the link to my playlist down below. Also, as a reminder at this stage of the video, once again, if you do want to sign up for Bybit, I would appreciate if you use the link in the video description, because this isn't a sponsored video. If you do use my link, you'll get a bonus and zero fees, and I'll get a bonus as well. So links in the video description down below. So yeah, going back into conditional order types, let's say we only wanted to sell short Bitcoin if the price came down to $29,300. So what we could do here, we could set a trigger price of $29,300. We could set the order price as well to $29,300, and quantity, you can do that as you wish. You can set your leverage like I showed you as you wish. And then I can basically have post only, sell short, and it's going to be in my orders, in my current conditional orders. That will only sell if the price of Bitcoin goes down to that level. If it doesn't, it won't short. And I could have done it to a buy order as well, a long, same as to be said. So it's actually a really handy tool. So this next bit is very important. I want to talk about risk management, which in the purpose of this video, we're going to be talking about the liquidation price and using a stop loss. So let's first talk about liquidation price, how you work it out, because this is very important. You do not want to be liquidated. So one way that you can do that, first of all, to make sure that you get a liquidation notification or pop-up window. Basically, go to this little icon here. It's this settings icon, and basically if you come down to pop-up confirmation windows, just ensure that order confirmation is on. The reason you want to do that is it's going to show you this. When I put any trade on, it's going to give you this example. So I'll do a buy long here, and you'll see that this is the pop-up window you get. So that's why you want to make sure it's on. And the reason you want that is because it will tell you your estimated liquidation price. Now, if you're happy with the liquidation price it's giving you, then fine, put on that trade, but make sure you protect it with a stop loss. So in this example, my liquidation price is at $17,934. So if I wanted to put that trade on, let's say press confirm, just make sure that you add a stop loss to cover that liquidation price. So you'd put your stop loss, as we know it was about 17,900. We could easily put a stop loss of 18,000, press confirm, and that's going to mean we use a stop loss before being liquidated. And of course, you may want your stop loss in a much different place, much nearer to where you've entered. But the important thing to remind yourself of is know your liquidation price and set a stop loss accordingly. Now we understand a bit more about the risk management using the stop loss and understanding the liquidation. It's important to know how you can obviously apply a stop loss and take profit. You can do this, of course, whilst you're in a trade, which I'll show you, but most people prefer to do this when they're putting on their trade. So whether you're using a limit order, market order, or conditional order, you have the option by checking this box here, take profit as stop loss, and you can apply your take profit and stop loss to a trade. So I'll give you an example. Let's say we wanted to enter a market position. We're just going to use 10% of our available balance, and we want to put a take profit and stop loss. So the current price is 29,870. Let's say we wanted to take profit if the price goes to 31,000, and we want to make our stop loss at 30,000 as an example. Okay, so all you need to do is press confirm, and well, it's giving me a warning here. The stop loss price must be lower. Okay, so we'll put it at 29,000, for example. We'll press confirm, and now I also have take profit and stop loss with this order. So if I press buy long, press confirm, it has my take profit and stop loss, and when that position opens, you're going to see it in the take profit and stop loss. If you didn't already set that take profit or stop loss, you can of course add it in this section by simply checking this box, and you can even change it as you go. Again, don't want this trade open, so we'll close that by market. That's how you can set a stop loss and take profit. So the next thing I want to show you is about being a dynamic trader and changing margin in a trade. Sometimes you have a position open, but you want to apply more capital, or you want to apply more leverage or less leverage. Well, let's say you have a trade open. So for example, we'll do a 10% position. We're not going to use any take profit or stop loss in this example, and we're going to buy Bitcoin long at market. So this is for demonstration purposes. I'm not worrying here about liquidation or anything like that. So I've entered my trade and I'm at 10x leverage, as you can see. Let's say I wanted to increase that leverage. Well, you can do that by simply making sure you're in the correct contract, going to leverage here, and simply increasing it or decreasing it. So let's say I wanted to make it 25x. Well, what that's going to do, it's going to change the leverage here, 25x, and it's going to change the total value of the trade. So you can see currently at 25x leverage, $2,866. Well, if I take that leverage way back down to, let's say, 5x leverage, it doesn't change the value, but it will affect the liquidation price. So let me show you with an actual liquidation price here. So let's say we used, well, we'll cancel this order at market. We don't need that. Let's say we put on a 10x leverage trade. Okay, confirm, and we press buy Bitcoin market order, and we have a liquidation price here, $17,900. Well, what you can see here, by increasing the leverage, it's going to make your liquidation price much nearer to the current price because you're borrowing more. So look at this. If I change my leverage all the way up to example 50x leverage, well, the liquidation price goes up. up. If I want my liquidation price to go further away, if you have the margin to do so, you could bring your leverage right down and it's going to decrease the leverage. But in this example, I didn't have enough margin to do so. But if I bring it down to, say, I don't know, 4x, for example, then the liquidation price comes back down again. So basically you can adjust the leverage to free up capital or deploy more capital into a trade. So once again, guys, if you want to give Bybit a go, check out the link down below because it's a bonus link and you'll get these fantastic bonuses and 0 fees for a month. If you need a ID for KYC on Bybit, you can check out the legal ID from Palau. Like I mentioned at the start of the video, it's more if you want to skip back a chapter if you missed that, you can read all about it there and understand how you can pass KYC on Bybit with it. Another option is Apex Pro. It's a decentralized crypto exchange which is from Bybit. Now Apex Pro you can find by going to the trade place, the trade, sorry, it's not in trade anymore, it's now in Web3. Okay, so under Web3 you have Apex Pro. So Apex Pro is a decentralized crypto exchange where you can connect your wallet, and I've got a video that I made on this, so I'll put a link down below in the video description so you can check out that video. So you can basically use Bybit, it's not Bybit, it's Apex Pro, but all the great features that Bybit have using a decentralized exchange, and you need no verification, no KYC, because you're trading on the blockchain. So you can watch that video if you want to learn more about that. Also, guys, some other great features on Bybit is you have copy trading, one of the best copy trading features there are. I have a video on copy trading, again, link in the video description where you can watch a full tutorial on how to use the copy trading feature. There's smart bots as well. But if you do want to use a bot to trade, I actually highly recommend CryptoPilot. It plugs into Bybit and to your Telegram account. It's super easy to use, completely beginner friendly. Trades for you, it manages risk for you, stop losses, take profit, does it all, and you can earn about 50% on average per month. So if you want to check out CryptoPilot, you can also see a link in the video description down below where you can start a 7-day free trial. You don't even need to put any credit card details in or anything like that. And there is a handy video on their website to explain more. So guys, I hope you found value from this video. Please share it with a friend, smash the like button, make sure you're subscribed, have the bell turned on for future videos, and feel free to check out any one of these on screen before you go. See you on another video soon. Take care, guys. Bye bye.